markets reacting to President Trump's nomination of Kevin Warsh to be the next chairman of the Federal Reserve. I spoke with Kevin Warsh in July on this program on the rate cut outlook and the U.S. economy, as well as on Sunday Morning Futures. Watch this.
The president's right to be frustrated with Jay Powell and the Federal Reserve. Inflation comes when the government spends too much. Why is it that money and financial conditions are so loose on Wall Street and considerably tighter on Main Street? Because the Fed has the policy mix exactly wrong. It has a big balance sheet like we're in the 08 crisis or the 2020 pandemic, and has rates that are too high. It needs to shrink the Fed balance sheet and cut interest rates. It's lost its way in monetary policy, and all this big money on big fancy buildings is just another indication. Why does that matter, Maria? It matters because what matters most to the Fed is credibility. The Fed cut rates 50 basis points before the election. Long-term interest rates went up almost a percentage point. That's because they're losing credibility. I think what we need is regime change at the Fed, and that's not just about the chairman. It's about a whole range of people. What's happening now is the most transformative time in American economic history in a very long time. Productivity should be booming in the next 5 to 10 years because of technology. The U.S. should be at the very forefront of that.
President Trump said that Kevin Warsh should have no trouble getting through the confirmation process, but outgoing North Carolina Senator Tom Tillis is vowing to oppose Warsh unless the probe into Jay Powell and the Fed renovation project is dropped. The president telling reporters yesterday U.S. Attorney for D.C. Jeanine Pirro will not be doing any of that. Watch.
She's got to take it to the end and see, like you're doing a small renovation, and they've spent almost $4 billion doing a small renovation. I'm doing buildings. I built a hotel, the Waldorf it's called, and I did it for around $200 million. It's a much bigger job. I don't even see an end in sight. I feel badly for the new Fed chairman because he may not have an office for 4 years. I don't know what these people are doing. So it's either gross incompetence or it's theft of some kind or kickbacks.
Joining me now is U.S. Federal Housing Finance Agency Director, Chairman of Fannie Mae and Freddie Mac, William J. Pulte. William, good to see you. Thank you so much for being here. What do you think the odds are that Kevin Warsh gets confirmed?
I think he'll get confirmed, and I think it's a really good pick. I think President Trump knows exactly what he's doing in terms of interest rates, and we need, frankly, a Fed chair that isn't politicizing the Fed and can actually restore credibility to the institution. You know, Maria, Jay Powell has just totally turned this into a political football. These should be very straightforward questions. I mean, why should somebody be spending $4 billion on a building? So time can't come soon enough for Jay Powell to be gone, and I think it's a great pick, and frankly, we're looking forward to it in the housing market to have a new Fed chair.
Well, what do you want to say to the critics who say, you know, was it really necessary to launch an investigation into Jay Powell? The chairman's term is up in May anyway. Was this your idea?
Well, of course I wasn't involved in it. I don't work at the DOJ. I've actually never met Jeanine Pirro in my life, to be honest with you. But it doesn't take a rocket scientist to figure out something is deeply wrong with this building. Now, I'm in the construction business. President Trump is in the construction business. We toured the facility last July, if you recall. They have a thing called a reverse bathtub. They put in a new basement. They renovated the basement. The water tables are low here in D.C. You have the Potomac River. They basically had to create this reverse bathtub. I mean, what is going on? Who's getting paid for all of this stuff? I hope the DOJ gets to the bottom of it, but again, that's up to them, and that's up to you know, the people that are looking into it.
And well, let's to be clear, the investigation is about what he said about all of that, right? Was he honest and truthful with the Congress under oath? I mean, that's really what the investigation, not necessarily that he's spending all this money on the building.
Honestly, I don't know what this.
Okay.
Honestly, I don't know what the scope is, but I can tell you, Maria, when you look at what his testimony was and you look at some of the things he said, when people lie about small things, they tend to lie about big things. And who knows where all this money went? $4 billion is a lot of money. You know, when we walked around, Maria, they had doors in there that had wood that was put over the doors to protect the doors. Why do you need to pay people to put wood over the doors as you're renovating inside of a building? Why don't you just put tarp? They also took down the walls, took down the ceilings, ripped everything out. It really doesn't make sense, Maria. And frankly, the Fed is like the premier institution. So I'm very confident and very happy that we now have a new Fed chair coming in.
Well, I guess that's what happens when you have construction experts really zero zeroing in on these things, you're going to figure out things like that. Let me move on to the scope of your business for Freddie Mac and Fannie Mae, and the Freddie Mac portfolio, the mortgage portfolio, growing to $3.67 trillion as credit performance holds steady. Fannie Mae's portfolio sitting at more than $4.1 trillion as of December. What do you want to say about this? Are IPOs of these two companies still on the table, or is this off the table at this point?
Well, of course, President Trump keeps options on the table, all options at all times. We are ready to go for when or if the president decides he wants to do that. But the reality is we don't have to do that. And Maria, I would just say, look at those numbers, 3.6 trillion, 4 trillion. Until this administration, specifically this president came on the scene, nobody even knew that these two businesses existed. I mean, it's almost criminal that no other president utilized these companies. They tried to convince President Trump in his first term to sell them for $100 billion. Now we're doing a $200 billion mortgage bond buy that has already reduced mortgage rates. So this is what happens when you have good leadership in these companies, good leadership in this country. And I'm very grateful that President Trump has been able to give us the air support that we need in order to make these big, bold decisions, which are going to fix this housing market that's been devastated these last 4 years under Biden.
So what are the odds of that IPO happening this year?
I think they're very strong, but I think it's very strong that President Trump wants to do something else. It's entirely up to him, and there's only one person who knows, and it's him. It's not me, but we are ready to go, and we keep all options on the table. You know, we had all this cash, and the president decided to do this big mortgage bond buy that actually helps the IPO, contrary to what people have said. So we have all options on the table.
Yeah, let's talk about that mortgage buy. The president obviously ordering Fannie Mae and Freddie Mac to buy $200 billion worth of mortgage bonds, with the effort here to ultimately lower interest rates, make America's housing more affordable. William, how soon do you expect this to have that kind of an impact?
Well, it's already had a massive impact. The only issue has been that we have the 10-year, which is driving up mortgage rates. So you have two aspects to mortgage rates, as you know. You have spreads and you have the 10-year yield. We can't control the 10-year yield. That's where the Fed funds rate and the Fed share come in. We can control spreads insofar as we have already reduced mortgage rates through the spreads. So we've done a really good job, thanks to President Trump's decision, at reducing mortgage spreads. You've seen refinancings jump 40% year over year. You've seen actually some cases, depending on the geography, over 100% rebound. So we are seeing life in the housing market. It's directly because the president made this bold decision. I don't think, Maria, that any other president would have had the knowledge to go about doing something like this. Now, again, we need that 10-year yield to come down. But again, I'm very confident that with the new Fed chair and with Scott Bessent, Scott Bessent and Kevin Warsh have worked together. They know each other. These are two good people who are going to be able to work on this issue. So I'm very confident if they handle the 10-year yield, we're going to start to see rates come down. Yeah,
but I mean, the yield on the 10-year is still right by 4.3%. I mean, it's up this morning almost 2 basis points. And you look at the 30-year fixed, the mortgage rate is sitting at 6.1% as of January 29th. That's up slightly from last week. So all of these efforts, and what do we have? We still have rates too elevated for customers to actually go out and take out a mortgage, buy a home.
Well, mortgage rates are down from when we announced it, first of all. And second of all is the reason rates are high, you can thank Jay Powell for that. That's why it's so important to get, Kevin Warsh and Scott Bessent and President Trump have gotten inflation down. Inflation under President Trump is now approximately 1%. Rates should be 1%. So when we look at the 10-year and we look at the Fed funds rate and we look at this high cost of borrowing, there's only one person that's standing in the way. He's not looking at data. He's being political, and that's too late Jerome Powell. And again, President Trump is right. This guy's too late. The inflation data is 1%. Rates need to come down. You're exactly right.
William, Wall Street economists are basically expecting Kevin Warsh, once he is confirmed and in this chair, to cut rates at least 2 times in 2026. There are some people who think he's going to cut 3 times. What's your bet? What would you like to see?
Well, I'll leave that up to Kevin Warsh and the Fed, of course. But I agree with President Trump when he says that rates should be materially lower. There's just no factual basis to keep rates this high. You have inflation running at 1%. Joe Biden had this crazy inflation.
You make a great point about inflation. And, I don't know that people understand how significant inflation has come in. Mike Lee is with us this morning. And, Mike, you said earlier you're following something called true-flation. When you look at actually the components of inflation, what do you say?
Yes, so true-flation uses a million different real-time data points, and it's trickling. You're getting, and they're reporting it daily, trickling down below 1%. And so, you obviously have the shelter lag in the government data. If the government data can be trusted with not only with the shutdowns, but all the problems with it. But in reality, the rate of change of inflation has slowed to a grinding halt, yet we are tighter now than at any point during this inflation cycle. So that has not only put a tremendous amount of pressure on small business, on Main Street, but also mortgage rates, and has made it very difficult for banks to lend where you've had an excess spread throughout this entire period, where instead of 175 basis points over the 10-year, we're at 200, 250, 300. That's shrinking now, and I believe the $200 billion bond buy that you guys are going to do is going to really bring that in, which is going to make a huge difference if we could just get this 10-year down another 20 or 30 basis points.
Liz, real quick.
Yeah, just real quick. If you had 50 basis point cuts, 2 in a row after he takes, Warsh takes over, what would that mean for mortgage rates? What would consumers look for?
I think you're asking me that question. I couldn't hear exactly. But look, anytime you reduce rates and you do it over a consistent period of time, that's incredibly helpful to the housing market. You know, interest rates, my grandfather always used to tell me, interest rates are the mother's milk of housing. And, you know, you have interest rates that are prohibitively high.
Yeah.
People can't afford these monthly payments. And it's just because of Jay Powell. So you look at mortgage rates, you look at credit cards, you look at everything. It's dependent on these interest rates. And again, if there's factual basis for it, like President Trump says, then you address it. But there's no factual basis when inflation is running in the 1% to keep the Fed's funds rate at 3.75%. It just doesn't make any sense.
All right, we will leave it there, and we'll be watching all of that. William, good to see you. Thank you.
Thank you.
All right, William Pulte joining us. Stay with us. We'll be right back.